There we go. If you want your own copy, I'll give you permission. You want to record it on your own, Eric, or you're just going to use the channel recording?
I'll use the channel.
Okay. So that's how I would have gone about on this one. So this one, Erica, past perfect being past perfect. You know, this one, legit. That one's legit. And then this one, I think, I'm a little, I know Erica well enough that sometimes I'm surprised on when she misses, because I wouldn't have expected you to miss this one. And maybe it was the wording, but they're telling you that you bought a 6.5% municipal bond, and you should know that I'm not going to owe taxes on that. The customer's in a 30% tax bracket, 10% state after the same taxes. Now I can, in their rationale, I hate this one, Erica. In the rationale, they say you can assume the customer. So I don't know, did you actually take the 10% tax on that? Is that how you came up with 4.6? You recall how you came up with that?
Yeah, I can recall. I assigned it to the universe. That's how I.
Okay, well, I
That's what I
think the
did with that.
rationale here, I think this is fair because they have questions like, what's the effective tax? And on a muni, it's 0, right? So that's what this question is getting at. I think that's fair. What I don't think is fair is in the explanation, you can assume based on the nature of the question. That's kind of, my world is kind of BS. I mean, particularly since we tell you not to bring things into the question. So I didn't do that one for you because I just assumed I'd see and we'd talk about it. This one I did for you. This is a total return. And remember, I think we talked about this in our last time together about the only 2 ways you can make money is income stream and or price appreciation. So I actually made a little video on this one for you. Let's just go through it. We bought the stock at 150. That's my cost basis. That's simply when I turned the money into the investment. During the first year, I received $450 in dividends at income. At the end of the year, the stock is 161.25. So I've made some money in both income stream and price appreciation. Now here, the trick is now I got to figure out what did I make in price appreciation. I made 11.25, the difference between 150 and 161.25. Holding period, remember, means they're not asking you for an annualized return. It has nothing to do with answering this question. So we're going to take the 450 plus the $1,125. We're going to divide that by 15,000 because that's what it cost us to make this 450 and this 1,125. And that should give us the answer, which is 10.5%. That is legit too. That is legit. All right. So one more. This is my friend Cynthia. Cynthia, are you on here, Cynthia? Cynthia's on it. She's another past perfect victim. In the playlist, I've had people, this is embarrassing, but people will pay me $225 an hour to tutor them through past perfect, particularly margin questions. I'm like, it's a waste of resources because, but I think some of their employers make them, go through past perfect, hell or high water and have to progress through that and get certain scores. But anyways, this is one from Cynthia. What this is getting at is that you are covered in a put. If you didn't have the short stock position, again, I think this is outrageous. This is another outrageous past perfect question. But if I didn't have the short stock position, I would have to come up with money to sell that put short. I'd have to come up with either cash equal to the accurate exercise price, who cares? Or I'd have to come up with 20% of the market value plus the current premium, who cares? The point is I don't have to because I already have the short stock position. So when somebody exercises me and sticks it to me, I'm just going to cover my short stock position. So the answer is 0. This customer does not have to put up anything to short a put if he short the stock. What this question is getting at is that that's a covered put. I don't think it's testable. I think it's outrageous. Now, if Cynthia was here, I think what she might have done, and I got to give them some credit here, they give you a bad answer that sounds good. If they would have asked to short the stock, right? They're here, they're saying you're already short at 50. But that would have been $2,500, and I could use the $500 from the put, and my deposit for the whole thing would have been $2,000. Okay, so that is all the questions I think I'm current on what the ladies have sent me. So that means we're now into the chat. Okay, well, that's fine, Raven. If you're just wrong, that's okay. I'm not talking about you in particular or anybody in particular. It's just been a rough day because I feel like telling some people the channel is self-serve. Office hours or not, because you paid a little something, but oh my goodness, I get a little frustrated today when people are sending me comments that my YouTube channel questions are wrong. I'm like, well, perhaps maybe you should look inward. Maybe I'm not wrong. Maybe you're wrong. So investment advisor versus broker. So let's just get the screen here. The first thing I want you to know about investment advisors and broker dealers, what they have in common is neither one of them are natural persons. They are what we call unnatural persons. They're not living, breathing human beings. So they're both unnatural persons. And on the BD side, the way that we make money is different. Investment advisors make money differently than broker dealers. I think broker dealers are more about transactions. As you remember, we get paid on transactions. We either get commissions, the firm, when we act on an agency basis, or we get a markup or markdown when we're trading from inventory. And so that's how broker dealers get paid. Investment advisors don't get paid on transactions. Investment advisors get paid based on assets under management. So I think investment advisors are more about a relationship. Right? And they get paid typically a fee, not on transactions, a fee based on assets under management. It would be typical to be like, 1% would be typical. And, some of us over here get a 763. Those are agents of the broker dealer. And the agents of the broker dealer are going to have a 6 or a 7. Say you have a 6 or a 7, as to say you're an agent of a broker dealer. And then if that's all you're going to be as an agent of the broker dealer, then the state administrator is going to want you to combine that with a 63. And the problem with this is we have a lot of men and women who are 663 or 763. And the problem is they can't be paid fees. I just said the way they get paid is through transactions. So, in a traditional business model, 663 or 763, I say, Erica, what you should do is invest in a mutual fund. A mutual fund is great for people who don't have the time, temperament, or expertise to be managing money. You get professional management, you get diversification, you get ease of ownership. She goes, do you know where I can get a mutual fund? I say, well, as a matter of fact, Erica, I am an agent of a broker dealer and we do sell mutual funds. And yeah, you can get involved through my broker dealer. The one I did when I was a retail broker, baby broker decades ago, had a 4% load. So I say, Erica, if you invest $10,000 into this mutual fund, there's a 404% sales charge. That's $400. So $9,600 will go into your fund. The $400, the vast majority of that's coming back to my broker dealer. And then I get paid a percentage of that. That's called my payout. That is a traditional business model that we use for many, many, many years. And that's it. That's the end of the story. Now, if we want to wrap our products and services into a fee, these men and women are going to have to get either a 65. And that means if you have that 65, you can represent both the broker dealer and its affiliated investment advisor. Now, the 66 only works with a 7. So boom. And so, Erica, you're getting a 66. So you're going to be representing both a broker dealer and its affiliated investment advisory firm. And on that, we're going to typically have what's called a wrap account. That's why most people are getting 65s or getting 66s. And so that would be the distinction, and no fees if you're not properly registered. I have a lot of men and women who, work at State Farm or Farmers or Allstate, and their firm wants them to transition over into this, and they got to get this thing. And boy, for a lot of those men and women, that's a real challenge. So at least, Erica, you took a 7 not too long ago. So some of this should not look totally foreign to you. I think that 65, man, that is a real kind of a bear. Anybody doing their 65 right now in our office hour? Are we all 7s and 66s, or you guys all 766s?
Oh, I have my 65 already. I'm doing my 7.
Oh, there you go, Shirley. So
Yeah.
there you go. So, the 7 I couldn't consider the 65 to be a baby 7. It's got a lot of the 7 stuff on it. All right, Erica, what else do you want to know about this distinction between an investment advisor and a broker dealer?
Anything that you.
Well, I'm not sure it's me breaking up or you, Erica. You're
Think that I
breaking up.
may see that I might not be prepared for. Maybe just
Okay, well, okay.
buzzwords or distinctions.
Okay, just a sound check.
Maybe it's me.
Okay, just a sound check. Is it me that's breaking up or Erica? Just put in the chat if you could tell me. I think your connection's a little weak. I don't think it's me, Erica, but it could be. Am I okay on the audio? Hello? Hello, test 1, 2, 3, test 1, 2, 3.
You sound fine, Dean.
Okay. I think the very important thing, Erica, as a test taker, is when you're taking your exam to be real careful about what I call the cast of characters, right? And the cast of characters for you, Erica, that you're going to be concerned with in this discussion is these 4 cast members. Let's put this cast member over here. Now, as we said, some cast members only play one part. But Erica, you're playing 2 parts here, right? You're going to be playing this part in our play, and you're going to be playing this part as well. Boom, right? Shirley told us she already has a 65, so woohoo! So
Yeah, that was challenging. Whew.
yeah. So that means she gets her 7. I'm assuming you have a 63 already as well,
Yeah,
Shirley.
by the 63.6.
There you
yeah.
go. So she'll be done. She'll be done.
Oh,
Anyway, so
yeah.
the first thing I would tell you, Erica, it's very, very important to read the question once and just say, okay, what am I being asked about? Am I being asked about a broker dealer or an investment advisor? Because the questions that follow this whole discussion is about registration. And so that's why that's going to be huge for you to determine what you're being asked about, because the answers will be different based on that. By the way, one thing I would add is that the agents and IRs are natural persons. That means they're a living, breathing human being walking planet Earth. Right? Your broker dealer is not a natural person, but Erica certainly is. And so these 2 cast of characters. Now, the next thing, it's kind of like, I would think of it as like a flow chart, Erica. So once you determine whether the question is about a broker dealer or an investment advisor, if it's about an investment advisor, the next thing you got to determine, I told you, I try and be uplifting and positive, but I had a guy yesterday, he was so confused. And one thing he was confused about is this difference between a federally covered investment advisor. And so that's the second thing I'd look at. So if I discover this is a federally covered investment advisor, that's important as well, because that means the answers once again could be different. So you just got to be real careful about whether it's a federally covered. It's never both, by the way, right? It's either federal or state. So that's the next thing in our flow chart that I would suggest, Erica, that you got to be real careful about. Am I being asked about a state covered IA? Or am I being asked about a federally covered IA? Because again, the questions are different. So let's start over on the BD side. Let's assume they're asking Erica about a broker dealer. And there's no such thing as a broker dealer, Erica, that's not going to be registered with the SEC, not going to be registered with FINRA. And the broker dealer may have to register, well, let's put it this way, in at least one state. At least one state. Because the broker dealer has a home office. So it doesn't matter what kind of clients the broker dealer has. If a broker dealer, be careful, I'm being very specific with you, a broker dealer has an office in a state, it has to register regardless of the types of customers it has. Now, a broker dealer may or may not have to register in a state in which it doesn't have retail clients. If I don't have retail clients in New York, or I don't have retail clients in Texas. I don't have to register. So if all this broker dealer does is have institutional customers in New York with no place of business in New York, the broker dealer doesn't have to register in New York. If the broker dealer has one retail customer, one. So Erica, this is very important. There's no de minimis for a broker dealer. If that broker dealer has one retail customer, that broker dealer has to register in that state. All right, so that's on the broker dealer side. So let's just review. I said a broker dealer has to register in a state in which it has an office or it has a place of business. I said a broker dealer doesn't have to register in a state in which it has no office and no retail customers. How about the agent of the broker dealer? It's the same. So if I'm an agent of a broker dealer and I have a retail customer in the state, I'm going to have to register in the state. Now, on the agent of the broker dealer side, there's no thing about place of business. It's not the agent that has a place of business on the broker dealer side, it's the broker dealer that has that, right? So the agent is going to have to get registered if they have a retail client in the state. Now, there are exceptions to that. The exception would be, it's not a resident of the state. It's my client and he's visiting the state and I'm transacting business with him. And the state administrator says, why aren't you registered in my state? I said, listen, because I don't have any retail clients in your state. So that's on the BD side, the agent of the BD side. Now, on the investment advisory side, it's much different. I just told you the broker dealer is going to be registered with both the SEC and the state. IAs, it's going to be one or the other. That's it. It's either federally covered or it's state. It's never, ever, ever both. It's one or the other. So what's important, Erica, is for you to read the question to decide, are we talking about this or are we talking about this? It's never going to be both. So we got to put them in one of those buckets. I'll call those buckets or boxes. They go into one of those boxes. And then again, the questions will follow from that. The questions on the file will follow from that. Yeah, be careful. I'm just reading the chat here. Don't wear yourself out. I don't mind doing one a day, but you shouldn't be doing practice questions and missing them. This will be to get your mark. So, maybe you say, hey, I talked to my tutor guy or whatever you want to call me. And he said that might be, much if you need to lay some remediation, because that's what gets your scores up. You're not going to all of a sudden get better just missing practice questions. So I might say, why don't you do one every other day? And then, or take a day off and do some base work, lay some base, and then get back to it. And I think you'll be able to get above 70. So that would be my advice. All right. So Erica, you are going to sometimes get tested on you telling me what bucket the investment advisor falls into. So some questions say federally covered investment advisor. Some questions say state covered investment advisor. And you go, thank you very much. But do you know some of the things that would make you federally covered? Congress passed what's called NIMSMIA, the National Securities Market Improvement Act. And state administrators didn't like it because it created two things. It created what we call federally covered investment advisors. And it created federally covered securities. And so why doesn't the state like it? Because it took away power away from them. And so it created this bucket we're talking about here. What this is, and it also created another bucket called federally covered securities. And they didn't like that either. So, there's all about the bucket, so to speak. Okay, so does anybody know? Let's see. Is Erica the only one on her 66, 65? Anybody else doing that? Well, you can look forward to it. And, surely you'll be done, but most of you can go on to take a 63 or 65, depending on your thing. So, Erica, do you know, based on what are federally covered investment advisors? Based on assets under management?
Is it 100 million?
Right on. So 100 million or more, you get to choose. And I don't know of any investment advisory firm that would not want to be federally covered, because your life is so much easier, right? So now 110 million or more, no doubt you're federally covered. There's, other ones, but, that's the big one. Let's say I am federally covered and I start to lose people money, or they start to take their money away from me. How long until I get kicked back to the state? What's the minimum, the floor before I get kicked back to the state? So how much do
I
I
believe
need?
it's 90 days.
Right on, right on. You know, and I told you, you're very good at recognition stuff. So you're going to clean up on some of this recognition stuff. Right. You know, and I always joke, I'm not joking, but if you get good at all the recognition you're entitled to, that means you can get, you can miss more of the practical application kind of math questions. Okay. So now let's talk about whether you're an IAR of a federally covered investment advisor or a state covered. Because again, the answer is different. So, kind of like a flow chart. That's what makes these questions kind of challenging. So again, it's much easier. That's why I think of it. The regulatory framework is much easier for federally covered investment advisors and federally covered investment advisor reps. I also recommend that what you do is use yourself. So I would say, okay, I'm Erica and I work for. Now, Erica, you work for a federally covered investment advisor. So that means you're an investment advisor rep of a federally covered investment advisor. Woohoo. So you only are going to have to register in a state in which you have a place of business. Period, full stop. You, Erica, could have as many customers you want in another state and never get registered as long as you don't have a place of business. Now, you're going to have at least a place of business somewhere, right? The one I always use is like Fisher Investments in Oregon. Fisher Investments in Oregon is federally covered. They manage, I don't know, $400 or $500 billion. And I work from the campus there in Oregon, and I'm calling on investors in Texas. I have no place of business in Texas. I fly out on Tuesday. I talk to, try prospect and service our customers. I fly back Thursday. I don't have to register in Texas. I tell my supervisor that I think I should get an office suite and just work from Texas because I could be more efficient. And he says, yeah, let's do that. Let's open up an office in Texas. Fisher doesn't have to register in Texas, but now the investment advisor rep does. Okay, so that's it for the investment advisor rep. That's pretty straightforward. Now, state covered advisors are going to be registered in at least one state, perhaps more, right? Because they're going to have the principal state from which they conduct business, their home office, if you will. So no doubt they're going to get registered in that state. And they may or may not have to be registered in another state. And that's where now we get into the weeds a little bit about de minimis. And the de minimis is only for state covered advisors because we don't need de minimis. If we're federally covered, we can have as many clients as we want. So de minimis is only for state covered investment advisors and state covered investment advisor reps. De minimis is Latin for so small, who cares? And you know what the de minimis is? De minimis, where I tell the state administrator, I say, I'm in Nevada.
5 or fewer.
There you go. Right? 5 or fewer, and I have no place of business. I don't have to register. So I say the state of California, I'm in Nevada. I'm registered in Nevada, my firm, and myself as an investment advisor rep. And California says, Dean, why aren't you registered? Do you have retail clients in California? I say, I do. Now, remember, this is why this is so important. If I'm a broker dealer, I need to register. If I'm an agent of a broker dealer, I need to register. I have one retail client in California. But on the investment advisory side, if I have 5 or less and I don't have a place of business, I don't have to register. All right. So those are the big overviews. As I said, I think the biggest thing for you to kind of look at is knowing this cast of characters again, right? These are the cast of characters. Who is the biggest cast member? The state administrator, right? The state administrator is God. And then we have some other cast members. We have the issuer, right? And then we have, what are some other cast members? We have people are not persons. I mean, that's the way I kind of think of it. Anything else I can add to that for you?
I do have a question, but maybe I can hold it until after, just on scores and your opinion on that.
Okay. Anybody else got a particular question before we open up, just to like things like Rachel's question about testing? I'm sure Rachel, your mentor is, his intentions are good, but be careful because, they're not paid professionals like deans So sometimes even though they're well-intentioned, they might accidentally be giving you some bad advice. And so I would just say that we'll open it up here in a minute, Erica, for that. So a full exam every day leading up to it. I think if I were your accountability partner, I would want an activity commitment, not so much a number of exam commitment. And, then we want to talk about remediation and how we're going to get you into the 70s. And so if you have, I don't know when he or she suggested this to you, and if you're not moving above 70, I think the conversation I would have with my accountability partners, okay, well, you suggested I do an exam a day and I'm still stuck. So I think we need to kind of change course and direction. And, maybe what I'm thinking is maybe I'll do one in the morning and go over it, lay base the following day, do an exam and see if that doesn't cause it to go up. I think it will, because I do think you can get too tired, just wear yourself out doing, practice questions. I would prefer we're using practice questions or practice tests to get marks on the exam. So that would be one recommendation I would have for you, is just to, have that conversation and just say, listen, I'm not sure this is working. I mean, if they just gave you that recommendation, you've only done, 2 over the last couple of days, maybe you wait till you do a third, but that's what I would do. Calculation NAV. So Erica, I think people underestimate mutual funds as it relates to 65, 66. On every exam, mutual funds are huge. And there's 2 scenarios that show up. It's the same as your 7. When given the NAV and the public offering price, calculate the percentage sales charge. And that's one scenario that shows up. I don't think you're going to have to calculate the actual NAV. It's usually given information, but I would definitely know what makes NAV go up or down is the securities in the portfolio. The other situation is when given the NAV and the percentage sales charge, calculate the public offering price. And the reason that's important, right, because they may qualify for reduced sales charge. That's big on every exam. NASA, the North American Security Administrator Association, says we should not be trying to maximize our commissions. That's all about breakpoints, right? So you may actually qualify for a lower sales charge. And then the question is, if you do, what would be your public offering price, right? So when given the NAV, so here we go. Here's the NAV. I'll just make one up. And here's the public offering price. And you guys recall how to do that from your 6, your 7. The way we do that, Eric, is we take 10, the public offering price, we minus the NAV, and we get our sales charge of 85 cents. And then we divide the sales charge. Remember, Dean always tells you, you can't remember what to do. What should you do?
Divide.
And if you
Top
can't remember
from
what to
bottom.
divide, what should you divide?
Take the top number and divide it from the bottom
There
number.
you go, right? Ooh, max sales charge here. And I would definitely know the max sales charge is 8.5%. Okay, now I say, well, Erica, I know where you can get the fund for 6%. And, if we can get it for less, we certainly want to be able to do that. And let's say the NAV is still $9.15. By the way, I would just warn you too. One thing I admire about Erica, she does listen, and that's like I said, I get aggravated when people don't listen. And one of the things that people I think make a mistake on is thinking they're going to get all kinds of math questions, and they're not. But you got to be able to do the math that we know is there. Because the great thing about math questions is there's no interpretation of the right answer. You simply know it or you don't, right? So this is on the 7 as well, Shirley. So, and the way we proceed here is we take the NAV, the net asset value, in our example, $9.15. And again, we divide by 100% minus the sales charge. And so 100%. Sometimes people use 1, whatever floats your boat. I like to use 100% because I think of it as $1. So that would be 1, but dollar has 100 cents in it. So 100 minus 6%. And that's what we're going to eat here. And so that gives us 0.94. I just made this up, so I don't know what the number is, but we will do it on our calculator. $9.15 divide by 0.94. I get 9.73. And so the point again, Erica, is that paying $9.73 is much better than paying $10. So how are we going to get Erica this reduced sales charge of 6%? Very, very, very important. How are we going to get her this reduced sales charge? Well, on A shares particularly, we have what are called breakpoints. Ooh, quantity discounts. I'll just make up one. I'll say, Erica, if you invest $50,000 or more, you get the 6% sales charge. Ooh. Again, very testable. I'm not surprised, Eric, on that debrief, because I just think people really underestimate the mutual fund component. So lots of test questions here. Erica says, Dean, how much should I invest? I say, Erica, you should invest $49,999. And she says, why? I said, because then I would make a $300 commission, or excuse me, a $425 commission. And if you give me another buck, I'm only going to make a $300 commission. Am I a full service broker or violating the code of conduct?
Yes, breakpoint. So
Yeah. So be careful again, RTFQ on the test. And what I mean by RTFQ is breakpoints are good. That's a good thing, a quantity discount. That's a wonderful thing. But a breakpoint sale, that is a bad thing. P.S. The easiest way to stay out of trouble is to tell Erica all the ways she can get the reduced sales charge. So she says, Dean, well, that sounds wonderful, but for my initial investment, all I have is $40,000. I said, well, for $40,000, it looks like, Erica, that you're going to pay the 8.5% load. I say, do you think over the next 13 months, you might be able to come up with another $10,000? Because if so, we should fill out, test question, a letter of intent. A letter of intent is good. Whoop, looks like somebody's trying to get in here. Let me see if I can let you in. Oh, it's Cynthia. Well, Cynthia, better late than never, right? Cynthia, I did your outrageous butterfly spread. I made a little video for you.
Oh, thank you so much, Dean. I appreciate it.
And then I also, Cynthia, when we started this session today, I told you how outrageous that short question was they asked you. And
really?
so,
okay.
And so on that short question, the answer is 0. You don't need any more money to write a put on a short stock position because you're creating obligation to buy and you need to do that anyways. That question about a covered put, I thought that too is outrageous. Now, I got to tell you, I'm going to start a support group for past perfect students. You, Erica.
Yes, please do.
I mean, my God, Erica sent me one where they're, asking her under 66 to do present value calculations. It's just, I'm just so fed up with. I actually was talking to a very senior member of the Kaplan team. I'm not a Kaplan guy. I'm an independent contractor consultant kind of guy for Kaplan. And I said, man, whoever those salespeople are at Past Perfect, they deserve a bonus because they have somehow convinced these employers that tormenting their candidates has got some value beyond passing the test. I was so frustrated when I made your video, Cynthia. I was just, ranting about what a disservice they're doing because, it's time that would be better spent elsewhere. And, they've convinced that there's some good in that. I had a lady, and some of them have programmed learning, some employers, where they won't let you move to Unit 13 of Past Perfect until you demonstrate mastery of Unit 12. And this poor young lady, she was trying to get through the margin, and the margin questions are, as obtuse as the one you sent me. And I don't mind helping her, but my God, it was like, you have to be a margin clerk to figure these out. So, oh well. Right now, what we're doing is we're going over some of the calculations that you would encounter on both 7 and 65 and 6 and 65, basically all of them. And as I've said, I think people really, really underestimate mutual funds. Even people who just passed their 7, they're going to take their 66 of the investment vehicles. That's still going to be a lot of questions. Anyways, where we're at right now is we were talking about a letter of intent. And we said the easiest way to stay out of trouble and not do a breakpoint sale is to tell people about letter of intent, which is good for 13 months. Do you recall how long it can be backdated?
90 days.
Right on. Do you remember who doesn't get it? We don't allow investment clubs for purchases. So no breakpoints for investment clubs. Now, in terms of the other calculations, Erica, I don't think it might look like a calculation problem. So as I said, when you get what you think is a math question, take a strategic pause and just say, is this really a math question? So they do have questions where they try and confuse you about what's going to happen to the NAV based on certain scenarios, like people investing in the fund, people withdrawing from the fund. That has no effect on NAV. The thing I would lock down is that what makes the NAV go up or down is the portfolio of the security. So when you're looking at these questions and they say, X people invested X millions of dollars, or the X people redeemed X millions of dollars, what's the effect on NAV? You would say no effect. If they say, the portfolio of securities goes up or down, that's what's going to affect that. So that would be the other thing I'd warn you about. Anything else for today's discussion?
Yeah, Dean, can you go over equity linked?
Yeah,
Index?
ELN. So both ETNs. So let me just set this up here. So this is in the same category. So let's put open end. Let's put closed end. Let's put ETFs. And let's put ETNs. And so for everybody, this is another one of those where I think people just, on every exam. So the first thing you've got to be able to do is contrast. All of this is about contrasting. You've got to be able to contrast on the exam an open-end fund with a closed-end fund. You've got to be able to contrast an open-end fund with an ETF. And then you've got to be able to contrast an ETF with an ETN. There's no testable distinction, Erica, between ETNs and ELNs. And I would tell you that the biggest part of that is the N. What does the N stand for? Notes. And so let's just put this here. All of these, so let's do our first contrasting point. All of these are equity investments. They are equity investments. And so in all of these, whether it's an open-end fund or a closed-end fund or an ETF, there is, Erica, a custodian. And the custodian is holding the monies and securities, right? State Street Bank and Trust or JP Morgan. And this is a debt investment. Now, what happened, Erica, is some people want to get involved in this marketplace. And boy, they said, man, we'd like to get in this business and compete against BlackRock and Vanguard and Schwab and, Morgan Stanley and Bank of America. But man, to actually set up an ETF and own all those securities, man, that's incredibly expensive, right? Because when you buy an ETF, remember, there's a custodian, and there is in the S&P 500 Vanguard, the Spider from State Street. There actually is a custodian that's holding, $400 or $500 billion worth of securities. That's a little different, right? So what these sponsors do instead is they say, well, instead of actually setting up that custodial account and putting the securities in there, Erica, my financial institution will agree to pay you whatever the stock market does, whatever the referenced index does. So, for example, if the referenced index is the S&P 500 it goes up 36% and you have $100,000, I agree to credit you $36,000. Now, remember, that's the problem there is you're depending on the sponsor to have the resources to do that. So I would have no problem getting one of these, Erica, from, a bank I've heard of, JP Morgan or, Bank of America. But if this is from Acme, ELNs or us, probably not. The other thing is that you don't have as much liquidity and, the contracts are written to the benefit of the sponsor. So every once in a while, oh, never mind, we don't want to do that no more. So that's a huge distinction. And that is the testable distinction between these two things. And that is very testable to know that. Now, the other thing that is testable here is to be able, as I said, to contrast the open-end fund with the closed-end fund. Some distinctions between open-end and closed-end funds?
Open-end is the mutual fund and it's not marginable until after 30 days.
Excellent. Excellent. And remember on those calculations, Erica, if we did a POP minus NAV divide by POP, and we got more than 8.5%, that's got to be a closed-end fund, right? Because otherwise somebody's going to jail, right? Be facetious. And then the other way we would know it's a closed-end fund, it would be the only fund, mutual fund, where you could have an NAV that is higher than the public offering price, right? Because it may be trading at a discount. Open-end funds don't trade at discounts to NAV, right? So that'd be another different distinction. So what else? Anybody else know another difference?
Open-end is redeemable. Closed-end is trade.
Yeah, I like that, right? Open-end, you can redeem at the NAV. Closed-end, whatever the market says is what you get. What I'm looking for here is that closed-end funds can issue preferred stock and can issue bonds, whereas open-end funds cannot. They can own preferred stock bonds, but they can't issue them, right? So those are the big distinctions there. Now, how does an ETF differ from an open-end fund? Well, it has similarities. It does have similarities with a closed-end fund. What is one of the similarities of a closed-end fund and an ETF? Both of them trade supply and demand. And Eric, you brought up something people don't like about open-end funds. You can't buy them on margin. ETFs, you can. They're marginable. For test purposes, they're passively managed, meaning they're a little more tax efficient and have a lower cost structure. You'll get more questions on an ETF than you will an ETN. And you'll get way more questions on open-end funds than anything else. Yeah, but all that is good test fodder for sure. What else? Anything else you'd like to talk about today? Remember the big thing on these ones, Erica, very much a test question, is to know that those are debt instruments and you have default risk. Anything else, ladies? Municipal rules. You don't need to know them by rule number, but I would know a G20, they'll give you context. And G20, Cynthia, is the gift or gratuity rules the same as FINRA's? Do you remember that? FINRA's gift or gratuity rule, you can't give an employee of another broker dealer more than $100. Doesn't count normal deductible business activities, right? And then I would know G37, which is campaign contributions. You remember what campaign contributions are for municipalities? So I'm a broker and I want to make a campaign contribution. What's the most I can make?
$250.
Yeah, and I got to be able to vote. So that's important. I got to be able to vote for that municipal issuer. I would know that under MSRB rules, I have to quote yield to call on bonds at a premium. I would know under MSRB rules, I can't switch my status from being a financial advisor to becoming an underwriter. What else? What's another MSRB rule? They have A rules. Those are administrative rules. They have G rules, general rules, and they have D rules, definitional rules. Definitional rules. So the MSRB has a definitional rule about what a nominal quote is. Are you familiar with what a nominal quote is? That's a quote for informational purposes only. So if I work a bond desk and muni bond desk, and Cynthia, you call me and ask me for a quote, I say, well, Eric, I say, Cynthia, why do you need a quote? You go, Dean, I'm going to my accountant. I'm revising my financial statement. And so I said, okay, so you don't need a quote at which you can actually sell these bonds. You just need a quote for your accountant. You say, I say, okay, Cynthia, let me give you some nominal quotes. And I start giving her some numbers and she goes, really? What's so? I go, whoa, whoa, whoa. I thought I started this conversation by saying these are what kind of quotes? Nominal. If you want me to give you a quote at which I'm willing to buy your bonds, that's a different number, right? So they define what would be, by the way, customers get confused on this. We tell you on your statement, for example, all the quotes you're looking at on your statement, if you look close, it'll say these are nominal quotes. These are for informational purposes only. If you want a real quote, call us up. Call us up. I think those are 4 big ones. If you miss the muni component of the 7, it's not going to be rules. It's going to be not knowing the difference between GOs and revenues. It's going to be not knowing how to calculate tax and tax-free equivalent yields. That's what's going to bite you in the butt.
Dean, is there margin on the 66 other than Reg T?
No, just basics. Basics types of accounts is there, and the documentation is there, Erica, but nothing like your 7. So yeah, you should know about the credit agreement, the hypothecation agreement, and the loan consent. And then remember, Erica, a lot of it is legalese. So the hypothecation, remember, agreement is where you're pledging your securities as collateral for the loan. And I would tell you that NASA exam, oh my God, all of them can really kind of, the language can be, challenging. I was tutoring somebody the other day, Erica, on the 66, and we were doing a question, I had to hit the answer set from her, and she came up with the right answer, but in street cred. I mean, it was like, it was street language. It was correct. I said, well, now listen, you have the correct answer, but when we do the review, that's not how they're going to say that. Now you got to put that into legalese. Which one of these answers is what you just said in plain English street, language. Anyways, the term I'm hinting at here is this idea of using customer securities to support customer indebtedness. That is perfectly copacetic, to use Erica's securities to support Erica's indebtedness to the firm. That's a margin account. Now, boy, I tell you, a giant reading test. Would it be okay to use Erica's securities to support broker-dealer indebtedness? No. Right? That's where I'm using Erica's securities to get loans for the broker-dealer. And that's a big, big no-no. So, Erica, the word for that is segregation. So on your NASA exam, segregation is a good word. That means I'm keeping the customer's monies and securities separate from those of the firm. If segregation is a good word, what's a bad word?
Commingling.
There you go. I say, Erica, your securities, my securities, what's it matter? I was at a bar with my friend Erica. We had our money on the bar. It was kind of funny, because we're drinking and the bartender's just taking the money out of our cash pile there, and we're tipping well. And anyways, this guy was behind us. I forget what he said to us. He says, he reached into our area and he was confused. And I got into it with a little bit with him. I said, well, listen, you're commingling. I mean, it's easy to get confused. This is our area of the bar here. Why are you in this area of the bar? I mean, I think it was because it was us and some ladies, and maybe they thought I don't know what the guy's thought was. Anyways, I said, you need to find your own area of the bar. And he says, well, do you own this bar? I said, no, but I'm paying pretty good rent on this section right here. I said, man, if this place ever goes condo, this is going to be my spot. Anyways, I was teasing him a little bit. And then the bartender, he said something to the bartender said, listen, that guy's just been here tipping me well and paying me in cash. And you've been in here and you haven't ordered anything. You're already causing troubles. Get the hell out of here. I'm like, woo! But I thought what he was doing is commingling, right? He's putting his money and my money and whose money is what, right? So that's the bad word. Anything else you guys want to talk about in this office hour?
Yeah, Dean,
yeah.
Scoring. I'm fluctuating between 69 with past perfect, 70, 71. What do you think?
You're a grinder, Erica, so I'm not worried about you. You're a grinder. So as we said, I think you're going to pick up some points as you continue to work. And, just like your other testing, Victor, you got to be resilient. When's your 66?
On the 10th.
Have you done the test geek practice test yet?
Not yet. I did cap one.
Okay, well, save that one. And I would just keep grinding. I'm not worried about you with those scores because you're going to pick up some points because you continue to work and you're going to pick up points anyways from those scores. So I would like you to have a bigger margin of safety, Erica. I think that was the same with, was it, who was it? Was it Rachel? Yeah, Rachel, same thing. So I'm not, you gotta be pretty resilient when you're doing this thing because, you know, if you have a mindset of like 90s and A and you're getting like 70s, you can kind of get your self-esteem wrapped up in it and you shouldn't because it's just pass fail. And nobody invests with you because of, you know, how you do on exams. People invest with you because they like you and they trust you, not you can pass an exam. But that being said, on both those scores, would we like to have a bigger margin of safety? The answer is yes. I mean, if we can push those scores up, we'd like to, but I have many people between 60 and 70 that still pass. We just had another guy the other day on social media and he passed with some very low, well, not low scores, but 60 to 70. I'm a half glass, half full person. And I would rather you not have to be worried about whether you're on the cusp of that, you know, when I was honest with that guy, he's at risk. But I said, as long as you stay calm, cool, and collected, you don't get wobbly, you keep working. And he did, and he finished strong and he passed. So that's what I would tell you. So it looks like both of you guys are on June 10th. It looks like what a good day for us, right? So I'll put it in my calendar. We'll be sending some good test vibes, Rachel and Erica's way. So are you, Rachel, taking your 7? Which one are you taking? Are you taking a 7, Rachel, or are you taking a 66 like Erica?
The 7.
Okay, so 7's a, you know, a little bigger dragon to slay, but same thing. So I wouldn't, you gotta, are you full-time? I know, Erica, you're full-time studier, right?
Yes, full time.
How about you, Rachel? Are you full-time?
No, I work for 4 brokers. So
Oh
it's
my God, Rachel, I'm so
Yeah.
you know, listen, that's a thankless job. I'm sure they're great men and women, but you know, they all think that Rachel should be working for each of them full time. So
yeah, it's been a
that's
little
tough.
tough.
That's tough. So I think that's very difficult. But now that I know that about you, to do a full practice exam every day, I would suggest carving out some time in the morning if you can. Mornings are a little better, depending on your circadian.
Yeah, I've been doing that for the last like 2 weeks. Like even if I can get 30 to 45 minutes before work.
Yeah, I like it. I like
And
it.
luckily it's been a little quiet during like the day, so I'm able. It's been better.
Yeah, that's the reason I like mornings, because it's harder for the energy vampires to get to you in the morning. I mean, and by the time you get home, it's hard to, yeah, everybody has good intentions of studying, but you know, after a full day at work, that's kind of tough. So I would just tell you both ladies, if I were your accountability partner, I am not concerned with those scores and your test dates. What I'd be more concerned about is making sure we protect your psyche, you know, that you continue to practice, drill and rehearse, even when you're, you know, not getting scores that you feel good about. As your accountability partner, I'm telling you, those scores aren't bad. I don't think you would be at risk, and there's no reason to sound the alarm just yet. You know, 7-10 days out is when we can talk about it. And I think you should be hopeful, even with those scores as they stand. And we know you're going to continue to work. I still think it would be better than 50-50 chance that you would pass your exam. The only variables, and reason I'm not a little more confident, that's why we want to push it if we can, is because we want to have that, again, I say that margin of safety where you have a little distance. Now I say mid 70s, you know, the higher, the better. But the other thing I would tell you, some accountability partners, oh my God, they make you think like the world is coming to an end if you can't get like 80% plus. And, you know, that's counterproductive, I think. And a lot of times when people are getting those 80% pluses, it's because they've memorized questions and answers. And to be honest with you, that's not helpful. You need to kind of understand the concept. So I think there's definitely hope for all of you. Yeah, absolutely. So it's not over till you hit the button and see where you're at. And I think most sponsoring firms are pretty forgiving. If you miss the mark, Rachel, and you get a high 60, let's say you miss your mark, but they know you're working for 4 brokers and you're a part-time studier. I can't imagine. We want to pass the first time. I'm not saying miss your mark. I'm just saying, put in the work.
Yeah, well, I got a 64 last year on it, so
Oh,
I
okay.
won't
So
get
this,
fired, which is
okay. Well, there you go. So
this
maybe,
has been an ongoing thing.
all right. Well, there you go. So this
Yeah.
isn't your first trip into the cave to slay the dragon, right? So A little different scenario, but just keep working. And I told you, you're not alone. So the other thing I'd say, Rachel, is stay plugged in, come to the live streams, come to the office hours, just, so we don't lose touch. I get worried when I lose touch with somebody because I'm like, oh, where are they?
Yeah.
So take advantage of that. We have this, we're not doing a live stream tonight. It's a recording of the last one, but make sure you stay plugged in on the stuff that's available. And same thing, bring your questions, like Cynthia sent me your questions, Erica sent me hers, Ray sent me them. And so, you get those Kaplan QIDs. Are you using PassPerfect or Kaplan?
I have Kaplan.
Well, there you go. That's even easier because then you can just send me the QIDs and I can bring them up. But,
Yeah.
if you have questions, just bring them to the office hour or just email them to me. You don't have to,
When is the next office hour? I didn't look at.
I think it's full, but I think who did I let in? Did I let you in, Cynthia? I think we
Yes.
did the cap and I overrode it for Cynthia, I think. Don't listen for people who come to the thing. Don't give the secret out, Rachel. I think it's booked, but I'll just send me an email.
Okay.
Being the Series 7 guru at Gmail, and I'll manually put you into the office hour. The next one is, I'm just looking here. I think it's Tuesday. Is this Tuesday the 30th? That's today. Okay, well, that's not it.
That's today.
Erica, do you know? I thought I put another one. Isn't there another one coming up?
If it is, I haven't booked it yet, so I'm tardy.
Oh, I'm not sure. I thought I had another one out there somewhere. Well, I'll tell you what, I'll look. I'm looking at my calendar right now. Let's see. Free Tuesday overtime. Okay, well, I'll tell you what, ladies, I'm going to put an office hour.
June 16th. That's when it is.
It's when?
June 6th.
Oh, perfect.
Okay, there you go. So let me just check that.
I think that's the.
There we go. No, that's the overtime though. There's no
it's
office hour.
overtime. Okay, nope. So that's the only one I have
That's
actually.
available. That one you can book. But I'll tell you what I'll do. We have 5 of us here. So as soon as I get done, Rachel and Erica, I know you're testing June 10th. So I'll put an office hour up before then and build your Dean to-do list. And then if for some reason people jump on it, because sometimes like an airline flight, sometimes the seats are empty and sometimes they're overbooked. And just let me know, like I did for Cynthia, and I'll manually put you into the office hour. I'll raise the cap and get you in there. If it
Okay,
doesn't show
ladies.
up, it means that it's booked. Once it happens on my booking page and it reaches the cap, it disappears from the booking page. So,
Okay.
okay, does it make sense?
Hey, Dean, I have a question for you since I'm taking mine on Saturday. So I'm now ready to take, I haven't taken the practice exam or the mastery exam, but I'm ready. I think I need to take those. I've been doing the stimulated. I've
Yeah.
been doing, I'm averaging, I was in my 60s, now I'm in my 70s. I just finished one 76. So I'm not sure which one I should take next. Do you think I should take the
Save
practice?
the mastery. The mastery is a real gut check. So,
Is it?
yeah, so don't commit Harry Carey, right? But if you can get over 70 on it, you should feel really, really good. So,
Okay. Okay.
and don't be fearful of it, but it's a good mark, and you can add about 5 to it. And then the other one that's really good, Shirley, is the Test Geek practice test. So
Yeah, I
that's-
heard that. Okay. Yeah, I did get that from someone I worked with. So, okay, maybe I'll take that one first and then maybe.
Yeah,
do
that's a
the-
real good one. That has real strong correlation to the actual exam. So, maybe you want to save that one because that gives you a spot on score. If you get a 68
So
on
I have
that.
just a real quick question. When I was taking this last one, the ones I kind of bombed on was the hedges, the break even, the maximum loss mass. I mean, it just seems like, yeah, those
Well,
are
you're gonna get
really
covered calls. So
very,
Shirley, in the playlist, we just did a class last week with stock plus options. And you can watch that replay. And I thought we did a pretty good job on it. You can watch that. That'll help you out. But you're going to get a lot of covered calls. So the ones you're going to get are, you'd get 9 strategies, but the big 5 are long call, short call, long put, short put, and covered calls. So
Okay.
make sure you got a covered call. I have a separate video on covered calls. Make sure you watch that because that's there. So,
okay.
certainly.
Okay. So I'm not going to sleep for the next 2 days to 3 days. I'll just be up at the
Well,
rest of the night.
options on the 7 options, munis, and mutual funds is where they're the target rich environments.
Right,
So that's
right.
where you want to spend your time.
Right.
Right? And
Yeah.
Erica's a victorious test taker. So, we have victorious test takers in the house on the 7. So
No, I'm gonna be okay. I'm just gonna go in. I'm working really hard. I took off this week, so it's, you know, I'm
You
just
know,
gonna
I
go.
can't stress to people how much of it is just being dedicated, disciplined, and organized and work. I mean, it's unfortunate, but that's what it's about. So, and in Rachel's situation, it's harder if you know, I joke baby brokers have it a little easier, right? Because they're men and women right out of college. They don't have families. They don't have the
Mhm.
responsibilities of a career yet. You know, us
Right,
older folks, you know, we have other
Yeah.
things going on, right? So it can be
right.
a little more challenging for sure. All right,
Okay.
so I'm going to,
right.
ladies, put up that other office hour for you. And if for some reason it gets jumped on and it doesn't show up, you'll know that it's capped, and then just send me an email. I'll put you in there manually.
Okay.
Anything else for this office hour?
Okay,
Dean, I had
Thank you.
I had one quick question, Dean, just a follow
Yeah.
up, kind of similar to what everyone else is kind of mentioning. So,
Yeah.
you know, me being one of those that's like a self study,
Yeah. mhm.
and I'm trying to figure out like when I would schedule my test date. I've been trying to let the practice test kind of dictate that.
Yeah, I'm a little
But
worried you might make that timeline too long out there. So I think we need to set a date.
Yeah.
I would reverse and hear how many hours you have. So, you know,
Mhm.
I would plan on, you know, let's say you need anywhere from 80 hours to 100 hours, maybe more, maybe less, but let's just start there. And then
Mhm.
I would kind of look at your schedule and see, okay, where am I going to book these hours? I call them study blocks. And that would
Mhm.
give you kind of an estimate of where your test date should be. But it's hard to study without a test date because, you know, we were joking with Erica and Rachel, but June 10th helps them focus their mind. Their brain is
Mm.
drawing them to that date. That's helpful. I mean, it's, you know, it can be a little anxious or fearful, but it's a good thing. So I would like you to have a date. I think it'd make your study effort a little more sense of urgency in a good way.
Yeah, true. And should I have like a should I try to take a mark first to
Yeah, I
see?
like March 1st.
I mean, no, take a mark, like a practice
Oh,
test
yeah,
mark.
yeah. Yeah, get a mark. And you could do a mark before you get a date, but I would certainly want you to have a date. I think
Okay.
you've been active and been involved. I want to say a couple months now, right? So
Yeah. I wanted to
I'm
take it in
thinking,
May,
I don't know
and then
you all that well, Cynthia, but I would think, you know, late June, maybe early July. Is that too soon?
no, actually that's perfect because I was thinking I wanted to take it in May, and then I kind of delayed a little
Yeah,
bit.
you know, the more you leave it out there, I mean, it's just, you know,
I'm
like I
like
say,
rereading and things like that. And I'm
yeah,
like,
like I say, I just believe you should have a date. Usually, you know, you're where you're at, and it is what it is. But
mm,
almost always, I would suggest the first thing is to get a date. So, you know, it's hard to get your focus and get your study plan and start executing on that when it's a date that can be moved. Even if you have to cancel or move it, that's fine. But I would say late June, early July. Don't stress yourself out. But what will happen is the timeline starts to collapse on you.
mhm.
So right now, like we're talking about Rachel and Erica, June 10th, their study timeline isn't collapsing, but it will, right? When you go
Mhm.
7 to 10 days out, you know, you don't
Yeah.
have a lot more time to be fixing things. So that's what
Mhm.
you want to make sure you're using the best use of that time as you can.
Okay, perfect. I had to
Okay.
do a lot of rereading just because I was starting to forget
Yeah, and then
things.
be careful, Cynthia. I told you, you pass perfect people, you and Erica, man, you know, make sure you continue to, even though I get exasperated with them, make sure you send them because God forbid you're spending, you know, your valuable time trying to do a butterfly spread or trying to calculate net present value, whatever the case may be. So, you know, if you're not sure you're on the broad avenues and highways of this content, you know, make
Mhm.
sure you reach out because I would hate for you to go down some rabbit hole and be spending valuable time on things that aren't really important.
Perfect. I appreciate that. Thank you.
Okay. Anything else, ladies? What is with the ladies? We got to get some gentlemen to join us. It seems like it's all ladies all the time. No?
Focus on your loyal alumni, Dean.
There you go. All right, ladies. I'll see you if you're in the live stream. I'll see you tonight. Remember, are you still here? Who was it? Was it Rachel? The other thing, Rachel,
Yeah.
we have a drawing for a coaching call that we do at the end of the live streams. I don't know if you've been in our live streams, but
Yeah, I have.
okay, so we do a coaching call there, and so that's another opportunity where you can get some time to, you know, basically it's like an office hour if you win. We have a Zoom and we talk about whatever you want to talk about. I think Erica has been a winner. You know, I don't know, Cynthia, did you win? I don't think you've been a winner yet. You know, we spin the wheel and see what happens.
I'm
So we
sorry,
are
you said
going
there
live?
is a live? There is a live tonight or?
Yeah, there is a live. There's just not an overtime session tonight.
Oh,
okay.
okay.
Yeah, so
Okay.
the overtime is a recording. I don't do the Tuesday night all the time. I do it, you know, most of the time. So it's not tonight, but there's a one up on the schedule for next Tuesday.
Dean, feel free to
Okay.
draw two tonight.
You know, I know how
great.
to do that, Eric. I might do it just to practice because I learned how I can make the first person who wins not be on the drawing the second time. So maybe we'll try that.
Oh,
So
okay.
maybe we'll spin twice. Who knows?
Woohoo.
I haven't won yet. I'm hoping. Fingers crossed.
Well, there you go. The only other rule, I think we made a new rule, Erica, that you can't win 2 weeks in a row. So I think
Oh,
you're
that's
all
not me.
viable.
Don't worry.
Yeah, they're all viable. I think everybody's viable. So, all right, ladies. I'll see you
Thanks,
tonight. If not,
Dean.
I'll see you for the next office hour. I'll try to get that office hour up either today or tomorrow morning.
Thanks, Dean.
You bet.
Thank you.
Bye-bye.